is the rapid digital revolution of the asset management industry, with almost $80 trillion under management in traditional asset management. Just how big is the opportunity for digital and crypto assets? Now, Amit is the co-founder and president of the Silicon Valley Blockchain Society. And this is a network of some of the most significant investors, thinkers, practitioners, creators around the globe. And I love the mission. I bet you wrote this, Amit, which is a core mission to fund the revolution. Love that. Amit grew up in Pune, sharing a backyard with the famous Osho ashram. It's a bit like Burning Man, giving him a unique perspective on life. He's also he did the Australian Rally Championship. So here with his panel to help us understand how to get into pole position, please welcome Amit.
Thank you. Lovely to be here again. Let me introduce my panel. So sitting right here next to me will be Michael Sonnenshein. Easy pronunciation of his last name, Sonnenshein. Next to him we have, I believe it's Ray. Ray Hindi. Have I pronounced your last name right? Mm-hmm. I should be able to, because this is probably the only time where a moderator actually speaks the language of his last name, Hindi. We have Hani Rashwan and Michael Bucella. I want to start with an opportunity for each of you to introduce yourselves. But instead of tell us who you are and what you do, I think I'm actually going to start with tell us who you are and why you do what you do. Michael.
Oh, okay. That's a good question. So I'm Michael Sonnenshein. I'm managing director at Grayscale Investments. So day to day, I lead the world's largest digital currency asset management business.
What do you do with your free time then?
I don't have much free time. But I would say that, having been in the digital currency ecosystem now going on about 7 years, I think for me, dating back to about 2013 when I got involved, my aha moment, that kind of light bulb moment, was really thinking about digital currency as the springboard to financial inclusion. I think that we talk about all kinds of fantastic use cases, everything, this last presentation is talking about everything from stable coins to security tokens to, DeFi, all great ideas. But I think when we actually get back to the roots of what digital currency represents, its ethos, we're talking about change the world kind of stuff and changing people's lives. And that's really one of the reasons I got involved and continue to have conviction in the space.
That's fantastic. Happy to hear. Ray?
So my name is Ray Hinzi. I'm one of the founders of L1 Digital, which is an investment advisor based in Zurich and focused on crypto. So the journey started with fintech. We started investing in fintech, I want to say about 5-6 years ago, because as a consumer, I was not satisfied with the services that we were getting from the banks. And I'm originally Lebanese. I'm not from India. I'm Lebanese. And as a Lebanese, I've got trust issues. And so the move from fintech to blockchain made a lot of sense. And I think that those trust issues are reflected in my country today. So this is where it all started. I think our mission is to try to add value within the space, because you need to have actors to do so, and we're trying to do that.
Well, we'll go back to your trust issues a little later. This is not that kind of conference.
Sure.
Hani, please.
Hani Rashwan, founder CEO of Amun AG, a Zurich-based issuer of exchange-traded products. We have a bunch of crypto products on the Swiss Stock Exchange and elsewhere. I'm an Egyptian, so similar trust issues, different flavors, same region. We primarily service institutional high net worth individuals buying our products, but I guess the thing that got me into the space and into the company itself is there are a lot of areas in the world, not necessarily unbanked, but from a regulatory perspective, pretty hostile towards innovation, or in our case, in investing in crypto. And by basing ourselves in a safe haven like Switzerland, you actually enable a lot of populations around the world that might have the financial infrastructure to invest in ETPs, but not necessarily I suppose, illuminated government officials that would enable that to happen locally. And so we enable that to happen at all with our products.
Fantastic. Michael.
Michael Bucella, I'm a partner at a firm called Block Tower Capital. We're a hedge fund in this space and invest across venture, discretionary, and systematic strategies. I came into this space because I assumed at some point there would be a beautiful conference in St. Moritz that I could attend. That was the I am from New York, so I don't have so much trust issues, but I'm always skeptical of everything. And so, this was, the reality is I don't have an amazing, you guys are, I admire you for what you said. I just thought it was an inefficient market. So I was sitting I was in the cross asset trading desk at Goldman. I was there for 10 years. And at the point I was thinking about the switch, the S&P wasn't realizing at a 7 implied vol. And I'm like, the world is just getting boring. And I'm cross asset, right? So I can look at anything and everything. And the one thing that was glaringly obvious was that this crypto market was totally inefficient. And, the trade war conversations were just starting to really percolate at that point. And, a good friend of mine and now partner really pressed me to leave and pursue it with him. And so that was my initial draw. And the reality is, the reason I'm still so passionate about it is we're in this stuff 24/7 and something's new happening every single day. And it's impacting every industry. And there's not a single person in the world that you can talk to where this will not impact them in some way. So I just found it really engaging initially from a market standpoint and then transitioned into the technology and how it's going to impact the world. Fantastic.
And I love that you say, there's nobody, no market, and no industry that this doesn't touch. And one of the philosophies I operate with is that disruption is a collaborative sport. And you need everyone at the table. And the four of you especially deal with some very large investors, very large LPs, some of you LPs by yourself. So in talking about the state of the market and the opportunity ahead of us, if you were making this pitch, a really quick one, to a potential LP and not to an audience of, a fair mix of people, how would you be describing the space? And we'll start with you, Michael.
Yeah, I would describe it as liquid as venture could possibly get. Really, what I would describe it as is an uncorrelated asset class. You can make the case that it's a reserve asset after it rallied with the Iran-U.S. tensions. The reality is it hasn't been correlated since that day to gold or rates or any equity market. So it's a truly uncorrelated asset class. The age-old pitch for me is just traditional portfolio theory. If you insert a uncorrelated asset into a diversified portfolio, you will increase your expected return while simultaneously decreasing your potential risk. It's fairly simple, and don't get in over your skis.
Yeah.
We do that for you.
Good. Honey.
Going off of Michael's earlier point on how inefficient the market is, I think the Iranian case is really interesting because that happened at about 7 p.m. New York time, which is when the stock markets are closed. And so if you're an American investor in New York or California or Chicago, you couldn't easily buy gold or make a trade in a certain way. And we just assume that that's the way it is and the way the world works. We assume that the fact that the stock market is closed more hours of the week than it is open, the fact that in the Middle East our work weeks are Sunday through Thursday, whereas in the West it's Monday through Friday. New York and China could be 12 hours away. It's an inefficient market. And so I look at this purely as a next technological shift up that in 5, 10, 20 years will seem so obvious, and the antiquated way that we accept today, especially in the financial space, will seem a lot less relevant, and in a way where we look back and say, oh, I can't believe we did it that way at that point.
Ray?
So the way we do it is that we're quite thematic with the pitch because this is potentially very disruptive across many segments. and it's quite deep. But the fact that it's so disruptive means that this is an opportunity that could be that, in our view, is the most has the most asymmetry out there, and asymmetry is very attractive for portfolio diversification because, as I think Greg said, you can risk manage it very easily by sizing it appropriately. So you can place 1%, but if it works, it's going to transform your portfolio, and you're not going to be left behind. Not going to be left behind from a financial perspective, but also from an educational perspective. Because if that shift happens, and you're an investor, and you're not up to speed with the space, well, from a career perspective, you're left behind as well.
Right. Michael?
I mean, these gentlemen hit on a lot of the things that we talk about with our investors. Certainly uncorrelated asset, portfolio diversification, sized appropriately, digital store of value. I think the analog that's not being discussed as much, which we find to be exceedingly important, is in the United States over the next 25 years, we're looking at about $68 trillion is going to pass down from older generations, baby boomers, down to millennials and younger generations. And so we're certainly not going to go out and say that we think $68 trillion is moving into digital currency. What we do think, however, is that investors today need to be positioning their portfolios and looking at where, skating towards where the puck is going. Younger generations do not necessarily have the same investing preferences, and the same kinds of investments don't necessarily resonate with them. And so if you were raised in the time of Apple and Venmo and Bitcoin and the ability to pay your friends digitally, buy a flight with airline miles, whatever it may be, we most certainly think that digital currency is going to be a recipient of some of that value as money is transferred from one generation to the next. And so investors really need to be paying attention to that.
That's really interesting, and I'll come back to that in another context. But that's a really good point. Hani, you think that the state of the market right now, if you were talking about it in VC terms, is sort of like a Series B state right now. Why do you think that? Can you describe what you mean by that?
So I think that in general, the potential of crypto in the biggest bull case is often understated. And that often happens with new innovative technologies. If you look at any of the large companies in the startup space that we have now, enterprise or consumer, it's very hard to understand how large the market size is at the very, very beginning. If you were looking at Uber in 2009 and judging Uber's massive potential by, say, the size of how many taxi licenses there are in San Francisco, or in the United States, or indeed the world, it's not at all what the potential is. You can do it in enterprise as well. I think Stripe at the beginning was payments for credit cards only, for American companies only, for startups only, for developers only. Obviously now it's much, much larger. And so that's sort of how I think about it with respect to crypto. There's all of the analogs and parallels with comparing it to the evolution of the internet. And I think that's very valid. But if you look at the technology and the progress that we are at today, I think it's so incredibly early, which also shows that the potential upside is significantly larger than anything that we can reliably think about today.
So are you saying the $80 trillion of assets that can be managed is probably less than what this can end up being, using the Uber analogy?
So, I mean, sure. I think if you look at the 80 trillion, you're talking about the asset management space, right? If we're talking about a complete rejiggering of the financial system, of creating, as you said, more efficient markets, what markets could we touch? Could we touch commercial real estate? Could we touch bonds? Could we touch stores of value? Could we touch sovereign wealth? That becomes larger, right?
What would you touch first?
I think the way that the evolution of it as it's happening today makes a lot of sense. DeFi, the impacts with developing economies that might have more interest from unbanked populations, asset managements from uncorrelated assets, global hedges, stable coins that are more efficient, etc. I think the evolution is correct. All I'm saying is that I wouldn't confidently call what the top potential of the space is if we're truly talking about a step up technologically, a rejiggering of the financial system. The bull case is something that I don't think we can fully comprehend or estimate with reliable mathematical efficiency for another decade, possibly. And that's
Michael,
okay.
you seem to have
Well, so I think one of the things you asked, where is this going to disrupt first or take share of? I think one of the areas that's already underway is taking share of the gold market or Bitcoin or other digital assets emerging as this digital store of value. Perhaps gold and other things may have been that type of investment that had a place in a portfolio when the world was much more physical. For better or for worse, I would argue for better, the world has gone quite digital. And so it's time to start thinking about what constitutes a digital store of value, right? And so we start looking at things like Bitcoin. And today there are about $7 trillion of gold in the world, right? And, if you look at where the market cap of Bitcoin is, even if it, perhaps only takes 1% or 5% of the market share of that, and you apply it over, some probability and some time frame, you're talking about really asymmetric types of returns. But in terms of quantifying this, I think what's so important, especially for an audience like this that's looking at opportunities within the ecosystem and what's the appropriate way to get involved. The reason why I think today all of us are so excited is that digital assets, Bitcoin and others, still exist outside of the traditional financial system, right? That kind of dovetails nicely with the ethos of what digital assets are and largely why they were brought into, being around 2008, amongst the financial crisis. But there is such a flood of capital that stands to be able to invest in this asset class and really broaden and deepen the liquidity of it. Today, you cannot buy Bitcoin the same way and have it flow back to your investment account or your retirement account the same way that you'd be using a traditional custodian or a traditional trading system. And so a lot of the companies that are either here at this event or that, some of us are involved with or investing in, they're building the infrastructure around this asset class. And so over the last few years, particularly throughout 2019, the increasing development we've seen in the derivatives market, whether it's futures, borrowing and lending, now options on Bitcoin futures, these are the types of tools that investors, traditional investors, need to be able to have in order to really access an asset and really think about adding it to their portfolio. And I think a lot of that momentum is gaining into 2020 as we're seeing a lot more participation from legacy players, whether it's CME or Fidelity or others like that. And so those are the types of signals that I think investors need to be paying attention to, and I think are certainly going to be moving the needle for the asset class as a whole.
Yeah, very interesting. Ray, you have a fund of fund model. So in the same context of thinking about this space, what are your favorite VCs or fund managers saying to you that's making you open up your purse strings?
Okay, so they're not essentially saying it outright, but it's what I'm concluding based on my conversations with them. Mm-hmm. So what is very interesting in the space is that what we call the crypto capital markets maturation is providing a lot of tools. So it's not only, we're no longer at the level of shall I buy Bitcoin or not, or Ethereum or not. It's not about that beta. But today, as a lot of the panelists said, the derivatives market is exploding. Options are next. Operational risks are declining very rapidly with new service providers. And so essentially it's very similar to what you get in traditional markets. So you can underwrite very different types of risks. So you can underwrite liquid venture risk. You can underwrite counterparty risk, which you have to if you're in a trading strategy. Basis risk like fixed income arbitrage. And many more types of risks that would enable you to build a diversified portfolio and run a portfolio that exerts a volatility of 30% rather than 90, which is an important conclusion, especially if you want to get institutional investors involved, because line items in the institutional space is important, and you cannot allow a position to be down 90%, or else we're not going to move forward.
So for the VCs raising money in the audience, you know the things to say now to this gentleman. How do your fundamental trust issues, and we can look at whether it's Argentina or Venezuela, Iran now, or certainly Lebanon. It represents a huge opportunity. It's a huge market. We're seeing kind of this will play out into the size of the digital futures market. How does that play into the way you look at investments you make into VC funds?
So at the end of the day, you've got so the VC funds that we're going after. So there's two opportunities on the VC side. There's services, which are companies that service the space and are really important. So that's equity. But the real, the expression of that trust theme is done through venture funds that are focused on decentralized networks, and that are investing in layer 1, layer 2 infrastructure and applications that solve a lot of the problems out there. Yeah. So funds that invest in Terra from Korea, or Silo, who's going to be talking next, that are solving real problems. Yeah.
Cool, fantastic. Sticking with the VC part now, Michael, you and your partners at Block Tower have a reputation of being young in this space. You're very entrepreneur friendly. You like to roll up your sleeves. What are you hearing entrepreneurs who come to you asking as their biggest challenges right now, and in the context of versus what you really think their challenges are?
Yeah, that's an interesting question. So I'd say entrepreneurs have been forced to refocus on solving problems that exist, not solving ones that don't. And that's been, I think, a revelation over the last year and a half. Stepping back, I mean, we do a bit of everything. So for the audience, I think about the way to think about it, we talked earlier about the asset class selection, right? Cryptocurrencies, Bitcoin. Then there's the asset selection, which we can equate to security selection, but they're not securities. And that underrides kind of thematic selection. And then, so within themes, you could talk about DeFi, you could talk about scaling solutions, staking, and then, within that, there are certain liquid and private investments you can make within each. And so I think the idea is just having a handful of focus areas that your firm focuses on. And so us, for example, on the venture side, which is a smaller portion of our book, we are now focusing a lot more on market microstructure companies that we can interact with, that we would use, that we can understand if it'll gain traction, or we can help them figure out, a way to pivot to gain traction. 2019, I kind of, say, joking, but realistically, 2017 was the bull market, 2018 was the bear market, 2019 was a strange year. It was a year of development where Bitcoin was up 90%, but it didn't feel like it. Altcoins, most of them ended the year with substantial losses. And as a fund manager, you're trying to navigate that as best you can. And having focus on particular themes or assets is the biggest benefit you can do to yourself as a fund manager, because it's very easy to go far and wide and go after a lot of shiny objects in the space. And so I think a lot of projects believe and likely are going after an enormous use case and something that they're going to solve all the world's problems. And I think it's just a matter of focus. I think it's a matter of, okay, great, you built the right tech stack. Now you got to figure out the right partnerships. And that's why it's important to have a global team, or at least a team with global connections, where, if you're on the liquid side, that this particular project had a great meeting with Rakuten, but their meeting with Dentsu didn't go so well. And so how's that going to impact the underlying asset? And should we be building position, or should we wait for a fallout following, how the news flow shakes out? And so that's kind of how we think about things holistically, how the opportunity represents itself, whether it is whether it's in a private market context or public market context. then we approach it very differently. We trade our book we have fairly high turnover, and that's been a more recent phenomenon with the advent of better trading interfaces, whether it's, and Greg mentioned Paradigm on the Deribit platform. That's been great for the OTC market. On the option space, CME launching decent numbers. We'll probably still use more of the unregulated exchanges in that world just because of market depth. But we do have a desire to go to a CME over an unregulated. I think, again, a company can be the greatest company in the world, but if you're a $100 million hedge fund and you can't put on a position in the public markets, it's difficult. So you have to engage them in a different way. Maybe you go to the team and say, we'll help you, but we'll buy directly from Treasury because we're not going to bid you up on the public exchanges. So there's a lot of different. So it's picking the right theme, picking the right asset and team, and then deploying in the right way. Yeah. There's a lot of different pieces to it, at least on our end.
Yeah. No, that's great. That's great insight. There's some interesting keywords that were touched upon by all of you throughout this conversation. You talked about solving the world's big problems. You mentioned, impact. For both of you, coming from the backgrounds you're coming from, you think about financial inclusion. When you talk about the 68 trillion asset transfer that's happening to this next generation, one of the traits of this next generation is that they're not going to invest like the last generation. They're focused on solving some of the world's bigger problems. Impact shows up a lot in their conversations. And it brings me to a question I'm going to put all of you on the spot about, because we haven't talked about this before. And for those of you who were in the room yesterday when Tyler and Cameron were talking, a question I asked them was, given their public profile and given this whole conversation of this evolving space, we're not talking about just the early stages anymore. We're talking about Series B. We're talking about $68 trillion of asset transfer. We're talking about some of the largest investors and fund managers coming into the space. We're talking about not just financial inclusion of people in Africa or India. We're talking about some of the largest companies coming into this space. We're making this mainstream move in so many ways, whether we're saying it intentionally or not. So my question to all of you is, what is our responsibility, given that we are now making this transition to not be these guys in a corner that's trying to disrupt the existing world, to take a responsible position about the planet that we're living on, right? Given that you all are all people in influence, you've been in this space for a long time, you're playing an important role in influencing what happens in this space. What is your moral, ethical, and responsible position on what we need to do for this planet as a whole? I'll start with you, Michael.
I don't know that I or we on this stage or we as an industry can solve this planet's problems or this world's problems. I do think, however, that I disagree slightly with some of the panelists. I don't think we're at Series B. I think we're in the earliest innings of this asset class. I think we're at seed money. I think we're really just starting to scratch the surface on where opportunities lie. The biggest opportunity, the burden that I individually carry, that my whole team carries, and I think that we as an industry need to carry, is really, quite frankly, purely just education. Everybody here is, taking on investor capital to deploy in different ways. We have a whole family of products. Everyone here has a whole different style of how they're giving investors access to this asset class. The degree to which there is misconception, misunderstanding, and really, quite frankly, almost terror about what digital currencies are, or what individuals or even big institutions think that digital currencies or what this asset class has actually manifested in their head is really quite shocking. I think we really have the opportunity, fortunately, to sit across from some of the world's smartest, most storied investors and biggest companies and university endowments and you name it. And you'd be shocked that even 10, 11 years into the life cycle of this asset class, how often we're still getting kind of those 101 and kind of 201 questions about it. And so certainly as an asset manager, we're always looking to raise money, but I'd say we spend easily 65, 70% of our time educating people about the asset class, writing research about it, and running around the world and getting on stages like this and hopefully offering people a unique insight and be able to kind of debunk what some of those myths may be.
Which is really important, and thank you for doing that actively. But are there more tangible things? Are we willing to, put ourselves out there in a more socially responsible position as the people creating this new industry? Ray?
So apart from, so I'm going to answer your question. I've got two responses. One that we're applying as we speak. So education is very important, but implementation is also very important because quality in the space is very scarce across the board, all functions. And as a result, you see that high quality people and groups collaborate a lot, and that's very, very encouraging. So implementing in a high quality manner is very important because big mistakes will take us backwards, and that's important. In my case, which is something that I've thought about and unfortunately need to work more on, is looking at what's happening in my country, for example, in terms of seriously trying to work with people in my country to build a parallel financial system potentially. But those are risky moves. Those are moves that put you against the law. And as as my government is highly corrupt, if you become very high profile there, it becomes very, very risky. So those are the only, that's probably the only area where I could potentially contribute from a social perspective, but I would have to give up, I would have to choose. And it would be a very risky position to be in.
I would wager, I would challenge that perhaps we don't have to choose. And we can have a conversation about that. I'm sure people have a lot of opinions. Any quick thoughts, Hani and Michael, on this, and we'll take some questions before our time is up?
I'm generally a big fan of markets that are open and free, visible and transparent, often take away a lot of the damages that we are talking about, just from a social perspective even, definitely from an economic, definitely from a political perspective. The way I see blockchain and crypto in general is that it is a push towards more open infrastructure, towards more transparent infrastructure. And I think that will, if we keep that up and if we don't succumb to some of the pressures that we're getting, will return dividends in terms of some of the benefits that you're talking about, in terms of some of the benefits from to folks in specific areas around the world. So that's how I would think about it, is if crypto succeeds in the form that it is initially being built as today, then a lot of people will be lifted from arduous circumstances, politically, socially, economically.
Great.
Yeah.
Michael, any quick thoughts? And
Yeah,
then
sure. We're I separate the two. I mean, our primary goal is as a fiduciary to our investors. So we hold reputation above all, and will not interact with people who don't kind of abide by the same moral code that we do. But for us, the utmost important job as a hedge fund manager is to generate superior risk-adjusted returns for your investors. That being said, the technology itself, all technologies, early adopters, are in nefarious industries. Do we help people transmit money to their families in need in emerging or distraught economies? Yes. Did the ICO bubble probably help some folks launder some money? Yes. The future of this is much more impactful than the past, and so I don't know what the future holds, but my assumption is the community around this space is progressive and thought leaders, and my fellow panelists up here, the audience, I think the future holds a lot of benefit to society, whatever shape or form it takes.
Well, and the good news is we're seeing this as the trend in all businesses, right? In Silicon Valley, for example, the outside of wage and role, the best anti-attrition tool is what the company does and what they represent, right? And I think that if we have the opportunity to take lead on that now itself and not kind of be reactive as the current world has been, then I think we'd be doing a lot more justice to the space that we hold so dear. Thank you so much. You guys are amazing. Let's give a hand to these excellent panelists. Thank you very much.